And I'm handing over to Redge now. Is that, we don't have a break now. So Redge to, and this is Redge to Swardt. Thank you very much.
Well, good morning, ladies and gentlemen, from my side as well. I think it's good manners that I introduce myself. Like Victor said, my name is Redge de Swardt. I'm from EY, an associate director in our indirect tax practice, and I'm heading up our indirect tax practice in the Western Cape. Been involved in VAT for longer than what anyone cares, and in tax for a little bit longer than that. That's a brief intro. Let's get going. Maybe just before we carry on with the next part of the discussion, I was thinking while we were talking about the registrations and the effective date, I think what is very important to just take into account is there's a distinction between compulsory registrations and voluntary registrations. And compulsory registrations are the ones that you become liable to register from the beginning of the month in which you exceed the threshold or expected to exceed the threshold, whereas the voluntary registrations is only at the end of that month, meaning actually at the end of the month in which you exceed the 50,000 threshold, you become liable to register effectively from the beginning of the next month. So the voluntary registrations you cannot backdate, but the compulsory registrations you can backdate to the registration date. And I was also thinking we had a case the other day where SARS registered the client incorrectly from a date, and now they're losing out on all kinds of input tax deductions. And we went back to them and say, well, we don't want to redo the registration, but can we change the date? And the advice that we got from SARS was to go onto e-filing and change the registration date on e-filing, and it worked. And I'm stunned still, but it did work. So you can go onto e-filing. The registration date's a date that you can change, and once you've changed the date, you can request the returns on e-filing. Hopefully they don't stop it now that it's out there, but it actually does work. Okay, let's get going. Important things first. We have a break in an hour, so that will be our first tea break. We need to discuss output VAT, different types of supplies, zero rates, exemptions, etc., and the time and value of supplies. There is an order in the program. We're not necessarily going to stick to that order, but as we go through the discussion, you'll see how we will going to deal with that. The other invitation from my side, please, if you have questions, just stop me, ask questions. We have these enormous lights shining in our faces from here, so the only time that I know that you're still there is if someone asks a question. Otherwise, I should just talk to myself from up here. I really cannot even see you. But let's get going. So the first part of this part of the discussion is to deal with the charging provisions of VAT. When are you obliged to account for VAT on supplies being made? And then we'll build up from there. These charging provisions have time of supply provisions linked to them. They've got value of supply provisions linked. And then they have different types of rates linked to them as well. It may sound very theoretical. Hopefully, as we go along, questions that you have, some examples that I will share with you, you'll see that this is actually part of the backbone of VAT, and this is where a lot of the issues that we have with VAT and work that we have to advise on actually comes from. Okay, let's first start. There's a section in the Act, Section 7. This is the charging provision, and any discussion on when do I have to account for VAT or should I account for VAT has to start with an introduction on this section. The section says that in certain circumstances, and there's exactly 3 of them, VAT has to be levied. And those 3 circumstances are simply where a vendor makes a supply of goods or services, VAT has to be levied, and it's the vendor that has to levy the VAT. The second one is if there's an importation of goods into the Republic, VAT has to be levied. And then the last one is if there's an importation of services, VAT has to be levied.